Hi there. Welcome back to the program. Great to have you here with us. Prime Minister Anthony Albanese has held a face-to-face meeting with President Donald Trump, the U.S. president, at the White House, with the leaders agreeing to invest a combined $13 billion in critical mineral projects and work together to break China's dominance in the space. A framework for cooperating on critical minerals includes offering guaranteed price floors for new producers and blocking asset sales on security grounds. Most immediately, Australia and the US will make a $200 million US equity investment in a West Australian gallium plant owned by Alcoa and a $100 million US stake in the Arafura Nolans rare earth mines. Additionally, President Trump, the US president, has backed the AUKUS submarine sales and technology sharing pact, despite an ongoing review by the Pentagon, with the president saying, "There shouldn't be any more clarifications because we're just going full steam ahead on building them." U.S. Treasury yields edging lower amid improved risk sentiment around the U.S.-China trade outlook. U.S. two-year Treasury yield around 3.45. The 10-year yield fell back below 4%. And on the U.S. dollar, the index is up by 0.2% on the day. The Aussie dollar at 65.1. So let's get across the charts now. Hebe Chen from Vantage Markets joins me now. Hebe, welcome to the program. Boy, it's hard to know where to start, but I might start local and just put the focus on gold and copper with Evolution Mining. I've just been doing some research for an article I'm writing, and I mean, these price forecasts are pretty incredible.
Yes, good morning, Nadine. Yes, you're right. I think the gold miners, especially Evolution, is definitely a standout performer on the local market. We do think that since August, the price has been up nearly 70%. I think it's definitely one of the strongest names in the gold space. Now, you can see that volatility seems to be coming back. Yesterday, the price had dropped roughly about 4.8%, and today, just before I joined, I saw the price is up about 4.5 again. So we do see quite a lot of strong buying momentum, but meanwhile, we do see that after the price is making the all-time high, quite a lot of profit taking is also happening. From a technical point of view, I would say that the few signals are flashing that a potential short-term correction may be at play. Number one is that if you're looking for the momentum, KDJ is now turning lower from overbought area. I think that's a sign for the momentum is cooling. Another also quite critical one is the volume. I'm putting up the 24-hour volume here. You can see that the volume has sparked into the quite unusual high level, especially last Friday when the price making the all-time high at $12. And for that benchmark, if you're looking back, the last two times the volume get into such extreme level, it's often followed with a bit of a pullback for the making a short-term peak at that level. So I think that's another sign that buyers probably have to be aware of. Apart from that, I do think the support in between the 1060 and 1120. I see the prices now trying to fill the gap today, trying to fill the gap in between 1120 to 1169. If they can close above this level by the end of today, I think that's a positive sign. If not, that potentially we're seeing the prices will further pulling back towards the long-term trend line since August, and think there will be a critical level to watch if the prices could hold above the 1120 level. The next key support roughly about 1065. So I think overall, structurally, fundamentally, this is still a pretty strong company. The margins are improving and riding on the broader gold tailwinds. But in terms of short-term wise, I think a short-term pause of consolidation could be happening before the next leg moving higher.
All right, so consolidation for Evolution. Let's go overseas. We do have U.S. quarterly earnings season underway. One of the highlights from this week will be Netflix. How is it looking on the charts heading into the result?
Yes, it's another exciting week for Netflix that will report earnings tonight after the U.S. markets close. So we'll get the full number tomorrow morning. I think expectations are pretty high. The market is now looking for a 17% revenue growth and 29% of jump in earnings per share. So that's a pretty high bar for Netflix. Impressed, and just looking back into previous quarter, the prices, even that the Q2 earnings that fit with the market expectation, the share price still dropping about 5%. And you can looking at that since the last earnings, the price seems to be stuck in a pretty tight range in between $11.45 and $12.64. And that's definitely a clear ceiling and float for this upcoming earnings to challenge. I think the key test is whether or not these earnings could push the price above 1222, 1222, and then challenge 1260 resistance if the earnings do fit the beat the market's anticipation, and they do have a good story to impress the investors. But on the other hand, if the earnings like last quarters did not impress the investors too much, a potential seeing the prices were pulling back towards the 1147, and down there will be the 50 days simple moving average at below the $1,100 level, and that's quite critical. I think so far overall this uptrend momentum seems still valid for the Netflix, but it's just that they probably need a fresh catalyst to reignite the positive momentum for the price to challenge their previous peak.
Okay, so that is Netflix. The big one that's kicking off the Mag 7 this week, of course, is Tesla. Now, earlier this year, we were talking about kicking Tesla out of the Mag 7, but the share price has been doing better as of late. So how's it set up on the charts?
Yes, you're right. Tesla has experienced such a roller coaster year. As you mentioned, early this year, the share prices dipped as much as nearly 50%. But you can see that this uptrend, moving tunnels since the April bottom has been double the prices and to reach its recent peak at 471 level. But now it seems the volatility is coming back again just ahead of the earnings. The prices pulled back around about 10% in the past 2 weeks. In terms of Q3 anticipation, I'm putting up a snapshot for the deliveries, which has reported early this month. It's actually quite a good number, the record high deliveries, record high multiple figures. But now I think the major focus and what the investors want is a higher margin. And since they quite multiple rounds of the discounted price strategy, I think that's quite sort of giving the investors a big concern. In terms of technical wise, I'm now watching the 413 as the first major support, and below that is 386, which will just align with the 50-day moving average. I think a level that this line is the level that Tesla hasn't tested since August, so that will be a critical level, and that area will determine whether the trend could remain valid. The uptrend since the April could be still at play or will start to fade. I think that's a critical level to watch. On the upside, the stock has just reclaimed the 20-day simple moving average after last night's rally. So I think that's a positive side. They're just ahead of the ending. Whether or not they could hold above the level by the end of this week, they could potentially open the path back to 471, and above that will be 486, and there will be a new 52-week high for the Tesla.
Yeah, that looks like it. All right, Hebe, thank you so much for joining us. Really appreciate it. Yeah, great charts. Stay with us. We'll get you across some more stock specifics when we return.